few people trickle in. Really excited for today's chat, really all about fundraising, best practices with the lens of emerging fund managers. And first off, I really want to give a big thanks to Sara for joining. I'm incredibly excited for all of the insights she's going to share with us today. She's experienced pretty much every facet of venture capital, from deal sourcing to managing investments, working as an LP at Greenspring Associates. Greenspring is one of the massive funds out there with over $12 billion under management. She's a Kauffman Fellow, and most recently, I think for a lot of our conversation today, she's the co-founder and managing partner at Recast Capital. It is a 100% owned, women-owned platform for investing and supporting emerging managers in venture. Sara, thanks for joining.
Thanks so much for having me.
Anything I missed there? How was my intro?
It was wonderful. Thank you.
Okay. Okay.
And a tip of the hat to my former Greenspring colleagues, now Stepstone, actually.
Oh yes, because Greenspring was acquired, if I remember correctly. Yeah. Mm-hmm. And for those of you that don't know me, my name is Mike Pruce. I'm the founder of Visible. I started Visible back in 2015. Our core product that's used by over 6,000 founders today is a way for founders to update their investors, manage a fundraising process, track key metrics. And more recently, in the last 3 years, we've also built a product for venture funds, emerging managers of venture funds, and private equity groups to manage relationships with their LPs, with LP reporting, but also getting data and portfolio insights from your founders and portfolio companies. So yeah, feel free to use the Q&A function if you have any questions throughout the presentation. But yeah, just to get started, Sara, I would love to maybe just have you give us a quick overview about Recast Capital, and then we can get started.
Sure, no, happy to. And thanks again, Mike, for having me. So Recast Capital is a platform that both invests in and supports emerging managers in venture with a focus on more diverse partnerships. Recast was founded by myself and Courtney McCrae, two institutionally trained LPs by background that saw an opportunity to create a platform to focus more on a part of the market that we felt was not only generating the greatest returns or has the greatest potential for that outperformance within venture, but also by focusing there, you could really enable a pathway to greater diversity within our industry, because these emerging managers are far more diverse than the incumbents. As mentioned on the slide here, there are two parts of the Recast platform today. The first of which was the first product we launched was our enablement program. It's our tuition-free virtual educational program for emerging managers in venture. We work with 12 to 15 managers for 12 weeks, running our cohorts twice a year, bringing our friends from the LP and GP community to help address hot button issues that emerging managers are facing in and around fundraising. So I'm very excited to be covering this topic with you all today. We are about to launch our 6th cohort, which I'm excited about. But looking at just our first 5, that's where you see the metrics here. The 65 funds have been through the program, including the 6th, that'll now be 78. So we've seen some really interesting momentum and no shortage of amazing emerging managers out there. The second part of the platform is a fund-to-fund strategy that we launched to kind of create that institutional grade intermediary to help LPs gain access to this part of the market. So we are investing in emerging managers in venture.
Incredible. What was your path into venture? You clearly you have a lot of experience with Greenspring that helped inform starting Recast, but how did you navigate getting into the venture world, and what captivated you about it, Sara?
Sure. I joke often that I'm a kind of an unlikely LP. I'm actually an engineer by background. I have a master's and bachelor's in engineering and spent the first almost 8 years of my career working as an engineer for a venture-backed startup. I didn't really get more focused on the investment side of the table until I was awarded a scholarship, or essentially a fellowship, from Foundation Capital to serve as an early stage scout in my local area while I was pursuing my MBA. And I was working alongside a handful of other graduate students across the country and was completely bit by the bug. Fell in love with the idea of a career in venture as a way to support multiple companies as opposed to just one as an operator. From there, I joined a family office investment team. I was one of 4 individuals investing on behalf of the family in both funds and companies, sector and stage agnostic. A really fun place to be investing, amazing family to support. But unfortunately, while I was there, the patriarch of that family passed, and with it set off a bit of a strategic shift within the organization, as it does when that occurs. But in our case, it was towards philanthropy. And given the long tail of our investment portfolio on the venture and private equity side, we essentially had to stop making new investments. And as a principal at the time, that was not an exciting prospect, as I'm sure everyone on the call can understand. And so that's actually what brought me to my most recent role, which was with Greenspring. Not only located kind of in my general area, the family I was with was an LP there too. And, it was just a natural early call to make. And it just so happened that timing was right for me to join their team. At Greenspring, I had the benefit of supporting them for just under 3 years, watched some phenomenal growth at the firm from 5 billion in assets under management to 12, and certainly extending far beyond that today. And, we're got exposed to both the direct and fund side, but I spent the bulk of my time on the fund side of the house. And, throughout my career though, throughout those various seats at the table, I became very passionate about what emerging managers could do for our industry, the returns that they were generating. I was experiencing anecdotally the returns that you could see, but also the data started coming out to prove that was true, right? Smaller fund sizes, earlier fund iterations, and more diverse partnerships that were generating those returns. And that I I've been the only woman in the room countless times in my career, and felt that by focusing there, I could actually help move the needle for diversity within our industry. And so, I wanted to spend 100% of my time on that. And so that's kind of where Recast came to be.
Yeah, incredible. Thanks so much for sharing that. I think we're going to use the word emerging manager a lot in the next 40 minutes. Sure. I think if you asked 100 people, you'd get 100 different answers. What is your definition of an emerging manager?
So we look at it purely based on fund iteration. So we tend to consider funds 1, 2, and 3 to be emerging managers.
I love it. Very simple, succinct, and it depends, which is an answer I often loathe to get. And then you mentioned the data was very clear about emerging managers, the asset class, diverse partnerships. Nick, why now? Like, why did you decide to start Recast Capital? Take you're at a top tier fund of funds and start something new. Like, why now for you?
So we officially launched at the beginning of 2020. And for me, it was, the platform I was at was amazing. And, I learned a great deal, was able to support amazing GPs, LPs through that function. But like I said, I just really wanted to focus 100% of my career at this intersection of diversity and venture, and felt the emerging manager space was such a compelling way to do that. And continues to be. I think, there's the data. By data, I mean there's Cambridge Associates has put out some data, certainly Harvard and others, that very specifically within venture, diverse partnerships are generating outsized returns. And within venture, it's those new and developing managers that are taking upwards of, I think it was 60 to 80% of the top 10 best performing funds by TVPI over a 12 vintage year period. I mean, it's just incredible. I may be getting those percentages off, and I'm happy to circle back with everybody with the link to this particular report. But just such an interesting perspective on our industry. And it's just been thrilling to be able to dig into it.
Awesome. Thank you. So let's get moving here. Belle, she's on our team. She's incredible. She'll be standing by to help answer any questions, help facilitate the chat. Feel free to leverage that. I think I saw a question come in. Yep, this is being recorded. We're going to send that out typically within 1 to 2 days. We also like to do a write-up and recap, and also link to any resources we chat about. And yeah, feel free. It sounds like people are already submitting questions in Zoom, so please feel free to leverage that. Just a quick agenda and outline for our chat today. We're going to talk about the top, middle, and bottom of funnel. How am I finding potential LPs and LPs for my fund? How should I think about nurturing them when I'm going through the fund building process? And then finally, how do I get across the finish line to first close and closing those LPs? And so one thing we'd love to hear from everyone. I'm sure we have hundreds of folks here. A lot of you are probably emerging managers or aspiring, or even currently fundraising. We'd love to hear, like, what's been the hardest part of your fundraising journey so far as an emerging manager. So if you want to type it in, feel free. We're going to use that to help drive our conversation for the rest of the day. And some inspiration here as you, the chat is disabled, so feel free to try to use the Q&A, and we'll try to use that maybe for your answers. I'm not sure if I can triage that real time, but the current fundraising challenges, I'll go ahead and kind of list these off here, and then Sarah, I'd love your kind of thoughts. One, I think, is like, how do I build a track record? How do I build a network of supporters? How do I find maybe the right LPs? There's lots of different LPs you can potentially work with. Like, how do I find the ones that are right for myself? How do I understand modeling, metrics, portfolio allocation, and how I should think about constructing my portfolio? But Sarah, you work with hundreds of emerging managers. Like, is there anything else that we're missing from this list?
Every situation is so unique. That's part of what makes it so interesting. Everyone comes at that, even if you're spinning out of a top tier shop, but, focusing on your firm for the first time, you're going to have challenges, right? Of this list, one that really stands out to me is finding the right LPs. And, I like to think about this as fund market fit. Just thinking about which ones you should be targeting out of the gate based on the strategy that you're pursuing. I think if you can get that right, some of the other challenges actually become less so.
Yeah. Awesome. We got some great ones coming in here. Finding prospective LPs, top of funnel, tons of interest in meeting number 1 and ghost for meeting number 2. We're going to talk about that because that is so, I think, par for the course, not only for emerging managers, but founders. Like, founders have the exact same problem. So I definitely want to make sure we hit on that later. And what else we got here? Lack of formal experience is the toughest. So yeah, keep these coming. This is great. And we'll get hopefully to some helpful insights here in a second. So let's talk about finding. Sorry, I'm clicking in Google Slides and it's making me miss here. I think this is one I want to start a fund. Maybe I'm an investor already in a bigger fund. Can you just talk through like your general 101, how I should think about finding the LPs and the right LPs for my fund?
Sure. So as I mentioned, fund market fit is so important. I think, when you look at the LP landscape, there's a number of different ways to kind of bucket them. So think about who best maps to your strategy. So first and foremost is check size, right? Which LPs can actually write a check that is appropriately sized for the fund that you are raising? So said differently, if you are out raising a $15 million fund and trying to get conversations with very large public pensions that can't even write $15 checks, their minimum is 50, 100, that is clearly not the right target. And that's why you see so much data pointed to kind of high net worth individuals, family offices being so many of the LPs that are leaning in with these smaller funds because they can write more modest checks. They have more flexibility in their check sizes as well. So that's certainly consideration number 1. Number 2, I would look at kind of the thesis of your firm. If it's industry specific, perhaps looking at LPs that have a vested interest in that space. Perhaps it's a family office that made their money in construction and is very knowledgeable about that space and wants to invest in funds that are in and around the construction space. That's important to know. And if you're a climate tech fund, perhaps you don't want to pitch that particular family office because they're looking for something very specific and it doesn't meet your thesis. I think that's also true for foundations, right? If the foundation has a mission that is somewhat tied to the thesis of your fund, they could also be an interesting target for you because oftentimes some of their endowment investing is tied to the mission of the overall organization. They like to see kind of that tie to one another. And then there's certainly the bucket that, they made capital or their thesis is such that they want all of their investments to be diversifying from that, right? And so part of it is that qualification period of the LPs that you're hoping to target, right? And if you can get any intel from the market on how those LPs are thinking about building their portfolio, it can be really helpful. The last thing I'll mention is how to bucket LPs, earlier organizations or newer family office versus those that have been around for a long time and perhaps have a very strong existing venture portfolio, those newer entities, those that are building out their strategies, that they clearly have far more slots for managers than perhaps those with established portfolios. So those you may have just a larger shot because there's just more shots on goal for you. So I'll pause there, but that's kind of how I would think about bucketing the LP world to see where you might want to be focusing your efforts.
Yeah, that last piece is interesting. It's very similar kind of the founder GP relationship where if you're thinking about my potential investors, I want to find GPs who have a new fund, right? Who have capital to deploy versus maybe the end of their life cycle. We had some questions here, like any resources you could recommend for exploring family offices and their preferences? Is this a publicly available resource? Do I need to pay for something like a pitch book or Preqin? Like, how can I go about maybe finding family offices that could be a good fit and just doing some general research?
Sure. In terms of just identifying them, it's interesting. If you just type in family office in LinkedIn, you'll get tons of folks that have private family office in kind of the company name, right? That they're the investment director at private family office. It's fascinating how you can really drill down into folks fairly quickly. And then of course, LinkedIn can be wonderful in finding those second degree connections to actually try and get the warm intro to that person. Clearly, it's better if you have an idea of that family office's investment philosophy, where they're spending their time, what they're interested in. You don't always have that luxury though. So I wouldn't be afraid to shoot your shot either, to reach out, perhaps it'll be a fit, perhaps it won't. But I do think it's worth doing even if you don't have that background information. I think in order to get that background information though, certainly some of the pointers here are useful. Of course, PitchBook and Preqin, if you can get access to kind of prior investments, you can kind of get a sense for what it is they like or what they already have in their portfolio. If you have relationships with more established general partners that are willing to kind of open up their Rolodex a bit, or at least share some of their market intelligence with you about who they know is spending time in what areas, that can be extremely useful. Build your peer network to the best you can as well. If you and Fund X have not competing strategies, but complementary strategies, there's no reason why both funds can't be speaking to some of the same potential LPs. Be helpful to one another. Rising tides lift all boats.
Yeah, that was kind of you answered that, I think, perfectly. One of my questions was the peer part, right? Where by nature, we're probably competing for the same set of dollars, but if we're not the same thesis, it doesn't hurt to network and have a peer group.
Yep.
What about, I think this is a great question, talking about shooting your shot and cold outreach if you can't get a warm intro, especially maybe if you're someone of a diverse background. Any best practices for just cold email or a cold LinkedIn message like that you advise the funds you work with? I think on the founder side, we always say keep it very succinct, 250 characters or less. Hit some sort of key bullet point, and that your goal here is not to tell the entire thesis of the fund, right? But just to get the first meeting. Like anything you would add there in terms of if my only strategy is I'm going to be reaching out cold to people?
Yeah, no, I think you're absolutely right. I would take the same approach as you think about it with founders. Short and sweet, to the point, if you can. Better yet, I know it's so much easier to like copy paste the same cold email if you can, but if you can personalize it even just a little bit, complement that foundation strategy. You saw they did an interesting grant recently that moved you, or such and such family office participated in a deal you saw and thought that was compelling. Or another hack I should have mentioned previously, but looking at kind of speaker lists from conferences, like not going to the conference, but reaching out to all the speakers that were there. Perhaps it was recorded. You could reach out and say, I really enjoyed this comment. I didn't get a chance to meet you there, but I would love to follow up. I think personalizing it even just a little can make a huge difference. But I would agree, short and sweet, something that you think kind of will get my attention. And that could be a wide range of things.
Flattery works. I know it's cliche, but like just a small one sentence piece of flattery, I think goes a long way. Yep. So I love that tip. Awesome. Anything else you would mention here about finding LPs before we move on?
Maybe one additional thing to add would be, yes, it is typically family offices and high net worth individuals that are supporting emerging managers, particularly those that are raising more modest fund sizes, just given the check size flexibility they have. But don't forget that there are actually others playing here too, outside of the typical archetypes I mentioned before, the foundations, the endowments, the pension funds. Corporations are spending more time here, right? There's folks that, if you have a thesis that maps to what it is they're looking for, they like these relationships for deal flow, frankly. And so that, I wouldn't shy away from those. And many of those corporates investment strategies are very public because they want to kind of get as many folks knowing about what they're doing. Banks are now doing a lot with emerging managers as well. There's a number of more formalized programs that have come out. Bank of America, JP Morgan, many others like them have programs that are focused on emerging managers and venture. And then finally, other venture funds are starting to launch kind of these fund of fund strategies, or partner capital strategies, where again they use it kind of as market intel, and they'd love to mine your awesome deals for their larger later stage venture, and you can determine if you think that that's the right fit for your fund, if you want to have that kind of relationship with someone or not. But they are also deploying to this part of the market. So I would just say kind of widen your lens a bit, because there are some interesting folks that are coming to the table.
Yeah. Let's actually talk about fund size for a minute. We talked about check size and some of the strategies. Like, what's the median fund size that, call it like a fund one, maybe I'm raising my first fund right now, that you're seeing, because that informs a lot of the strategy. Like, if I'm getting started, how should I think about the total fund size?
Well, I mean, I'll say from what we're seeing, or taking like a snapshot of our enablement program as an example, I think the vast majority of folks are in that kind of $10 to $30 million range for their fund one. But I think there are a number of factors that will go into that decision, and to some extent, you have to make sure your fund size makes sense for your investment strategy too. So just because you may fall outside of that range as you're contemplating your strategy, that's okay. I mentioned that only because that's what we're seeing, but you definitely want that your strategy to map to the fund size.
What about, I think you see a lot of newer emerging fund managers, prevalent on Twitter, LinkedIn, have a huge audience, and some of these folks are raising through like crowdfunding resources, right, from the crowd and smaller check sizes. How would you advise thinking about leveraging that as a tool for raising as part of my fundraising strategy? Sure.
So there are actual exemptions that you can have for that kind of public fundraising opportunity. There are pros and cons to that. Not being a lawyer, I would encourage those that are interested to kind of dig into what that could be, speak with your attorney about that. But clearly the opportunity to share publicly that you're raising your fund is fantastic. And there have been some GPs that have raised their entire funds that way. I mean, Rare Breed comes to mind as an example, right? Mac did a phenomenal job doing that. Not easy, but he did do it, and he did it very well. So there's definitely advantages to that.
Yeah, awesome. We're going to move on to how people found their first LP, what type of LP they were. Again, sounds like we can't get chat to work, so feel free to leave. Any comments about how you found success finding your first LP, the first person to take a chance on you? We'll monitor that in Zoom. And I just want to talk through like the right type of LP. I know we talked about the pros and cons a little bit, but we talked about family offices, call it high net worth individuals, institutional LPs, sovereign wealth fund. Where would you advise folks to start? Is the family office the best? Is it where I already have a network? Should I even start to think about, let's use, for this context, I got fund one that I'm trying to raise. Should I even think about institutional LPs at this point? I would love just to kind of get your download here on where I should maybe think about placing my efforts.
So I would definitely say it depends, right? I mean, some of the pros and cons here will vary depending upon which organization we're talking about, even in each one of these categories, right? There's definitely some endowments that are flexible check sizes, and they totally lean in early, right? And it's just finding those through market intelligence that I think is where you want to focus your efforts if you were looking at institutional LPs. I would say broadly, though, that given the check flexibility, high net worth individuals and family offices are definitely where folks tend to see more traction, at least in the early days, if not throughout the entirety of their fundraise of their first fund. I think that there are certainly some institutions that will lean in, but many are just flat out limited, structurally limited to play in this space. So it's nothing against small funds, it's nothing against fund ones. It's just they cannot write checks small enough to do it. There are also high net worth individuals and family offices that are, operate like institutions. So, take all of this with a grain of salt. They are very large and they are writing massive checks too. If you were starting out, I would say, yes, absolutely tap into your network, your immediate network. And I think that that's easy for me to say. And I know many of you are like, okay, yeah, sure. But like, if you're not independently wealthy, like I'm not going to ask my friend down the street to invest $1 million in my fund. Like, that's not the situation I'm in. And to be clear, that is not the situation that most of us are in, right? So I do think it comes down to that super proactive strategy on LinkedIn, looking for those warm intros where you can, utilizing the cold strategy where you need to, and seeing where it goes. And you'll be surprised. I do think that with peer networks and even other established GPs, doors will be opened. It's just, it's harder. It's harder for those that come at this space from outside of it, but can certainly be done. And I do not want to discourage anyone from doing it because it's those kind of net new perspectives that are generating the outperformance.
Yeah. There's been a big, call it macro market shift, especially in the publicly traded tech stocks. And that's affected the liquidity with a lot of high net worth individuals, probably tech employees who would write these checks or founders themselves, family offices. How have you seen that shift over the last, call it 12 months from when we had this huge meteoric rise of tech stocks and now, it was a bloodbath again yesterday. Like, how does that affect both of those folks, family offices and high net worth folks of backing emerging managers?
Sure. I mean, I think it can be very detrimental to their ability to play in this space today, in the sense that if they had a lot of their family wealth wrapped up in just a few stocks, they made their money through a certain, acquisition or whatnot, they may feel like the value they have, they're not going to liquidate those positions right now, right? It would be silly to, for some of their perspectives. Others just feel like it's the denominator effect, right? Their existing private portfolio feels oversized given what's happened to their public positions. That being said, I think that, folks that have been in and around this space enough know that you can never time the market. And I think that there's a lot of savvy venture investors that are still, and LPs that are still at the table, that want to be supportive, that know some of these down years can create some of the most interesting, vintage years moving forward. So there's definitely folks that are still at the table. It is going to take more effort, though. I do believe it is going to take more effort to uncover them.
Yeah. This question came in quite a few times, so I think that might be a great place to insert it. Recast as an LP. What are you looking for when you are evaluating a potential investment in an emerging manager?
Sure. Yeah. So at a very high level, what we are looking for is contrarian. Unfortunately, the emerging manager space can feel like a sea of sameness at times, right? The three general partners investing in enterprise SaaS. We have a hard time finding the differentiators for some of those funds, right? And so it's really kind of presenting your strategy in a really unique way and show us how it's new and different. So saying that, top down, we want to look at industries that we think have the staying power to really be creating industry leading companies over the next decade, right? Is it an interesting place for you to be spending your time for a significant period of time? And then bottoms up, how do we believe that the team that you're building, or that solo GP, if it's a solo GP, are the right ones to be executing that strategy? So let's look at your background, your expertise, your network, your point of view, your lived experience. What is it of that gives you an edge where we think that you would be the horse to ride in that particular vertical? Why do I believe that you will find the best opportunities in that part of the market. You'll be able to win them, allocation in those deals based on who you are, what you represent, what you can offer these companies, and so forth. And then, get that flywheel going of entrepreneur referrals that is so critical to building industry-leading franchises moving forward in venture. So it's a really combination of those two things. I have to get excited about your ability to win in the space. And I think this is where it's so important to think about everything through the lens of more diverse partnerships, because it's those different lived experiences, that broader set of networks that's going to make better investment decisions. And I do believe service the companies in which they invest in a better way. I mean, venture is super competitive. And I think to the extent that you can bring something new and different to the table, you are better suited to be successful in this market, particularly in this market.
Yeah. What's like, can you give me an example of something that's contrarian that maybe you've backed, you can publicly share that, just to give us a little insight into how you think about a contrarian investor?
So let's say it's an approach to a market that perhaps is overlooked, right? But a unique approach to that market. Perhaps it's a space that folks don't find as sexy as enterprise SaaS, but upon a closer look, you can really understand where spending your time there could absolutely create some, monster companies, just given shifts in digitization in those spaces, or kind of where some of the markets are headed there. But again, it's not a space that everyone's spending time. But if the right team comes together that really understands what those shifts look like, and they can convince me and my partner who make up our investment committee today that that's an important place to be playing, that's really what it is that we're looking for. It's not, will we invest in enterprise SaaS? Absolutely. Have we invested in enterprise SaaS? Yes. But the approach that particular team takes is different enough where we got excited about their ability to be able to identify winners through a way that identify the companies they want to target, said differently, and how they can support them in a very unique way that we don't always see.
Yeah, awesome. We got one very tactical question. I love tactical questions, so I'm going to ask it. For emerging manager programs, example CalPERS, do I just cold email to see if there's interest? My fund target is 10 to 12 million. My smallest check is 1 million, and I have 7.2 million raised. First of all, congratulations.
Yeah. Congratulations.
Am I too small for most of these institutional programs?
So CalPERS, along with many other large institutions like them, often have a team of consultants and advisors that support them through these strategies, and a series of separate accounts managed by entities, large and small, for specific strategies. So, in venture, I think for the strategy that you're mentioning from CalPERS specifically, if not mistaken, they awarded kind of 2 larger entities to help them deploy. I think it was $1 billion in this category. I think it was, I want to say it was Grosvenor and TPG Next, if I'm not mistaken. I may be getting these details wrong. I'll follow up again with more detail there. Yeah. I feel like I'm promising that a lot. Mike will help me clean all this up.
I will do it. Yes.
But anyway,
sure.
the point is that it's those entities that are making the investment decisions on behalf of CalPERS. And if those entities don't have strategies to back managers raising funds of your size, then it's not a good place for you to spend time. And while I can't say definitively whether those 2 groups would invest in a $12 million vehicle, it may be difficult given their size. And so I would consider looking at the market a bit differently. And pensions that are as large as CalPERS have very significant check size constraints. And so perhaps pivoting a bit further down that scale would be the better strategy for your fund.
Yeah, awesome. Thank you. That's why I like tactical questions. It gives everyone actual tactical, practical advice. Anything else? Sorry, I'll flip back real quick. I'm sorry. Anything else you want to touch on? Talking about targeting the right type of LP. We're going to move on to like, what does the ideal one look like next? But anything else here you want to add?
I think we're touching on this in the next slide too, but it really does come down to finding your people, right? Finding those people that are really excited about the strategy that you're pursuing, and they can fall in any of these categories. So all of the guidance that Mike and I are providing through the different archetypes here you know, do know that there are exceptions to every rule.
Yeah.
But it really does come down to finding your people. And if someone is not excited about what it is you're doing, that doesn't mean it's bad. It just means that it doesn't fit their particular mandate. So keep turning over the rocks.
That's awesome. Thank you. So talking about ideal LPs and looking through this list, I think like one, align with your vision. Should I even bother trying to convert non-believers to believers and buy into something? I think there's like, I'm putting my founder hat on, so this is the founder to GP relationship, but there's a lot of, call it advice out there saying, hey, don't spend your time on people that are non-believers. Find the right people. How do you think about like convincing someone to be aligned with your vision versus someone that's already bought in, maybe with your vision or thesis?
I think it's a waste of time to try and convince someone that your approach is the right one. Certainly if they need to be enlightened about the market because they're not as familiar about it, or they hadn't experienced a fund that had leveraged a portfolio construction, approach as that you have. So you need to kind of walk them through why you believe that's the right strategy. That's one thing. And that I think is absolutely worth doing. But, when you connect with someone who, really thinks you're a climate investor and is like, well, I don't think that remediation and mitigation is where we should be spending any time. And that's where you spend all of your time. Like that, I would just move on. It's a wasted effort, wasted time to try and get those individuals on board. There will be other folks out there that do believe in your approach.
Yeah. Anything else you would add to this? Actually, maybe talking about support. I think I'm a GP, maybe a solo GP or a smaller partnership. How should I think about leveraging my LPs and my investors for support, being helpful, helping me navigate? Like what does that relationship look like?
Yeah, I mean, I think that there are some LPs that do this exceptionally well. And, I'll say a huge goal of Recast is to be the LP that any emerging manager wishes they had, because we're so helpful, right? We want to invest early and with conviction and kind of shine a light on these folks to say, hey, other LPs, please come take a look. These are some awesome opportunities. That support can come in a variety of ways. I think it's certainly bringing on other LPs, right? If they're willing to kind of mention you and this opportunity to others that they've also invested with in the past, fantastic. But I think where you'll see the most support is just in firm building, right? Help build a institutional grade LPAC from day one. Start getting the foundation of the firm such that you can raise institutional grade capital moving forward, right? And get larger institutions like those endowments and pensions excited about the kind of scaffolding that you've built around the business. And then just generally, like, some LPs have been at this for a long time. They're more than happy to provide advice, things that they've seen go wrong, ways that they think you can improve your business. So I would say just be open to it. I think one of the biggest turnoffs, particularly for LPs that want to be helpful, is like not being able to engage in an honest conversation about, what would be beneficial for you and your business. It's, I want to use the word coachable, but I don't like it because you absolutely should have the, the advocacy to say, no, I disagree with that point of view. Like, of course, but just being open, right? Like it is a 10-year relationship as you've mentioned on the slide here. And so that kind of give and take and trust and, ability to communicate through tough times is important. But, that ability to be able to absorb some of that advice, I think is important too.
We talked about maybe what I should look for. What about red flags? I'm raising as a GP. Are there red flags that you like to coach, the funds you work with on? Don't spend your time there. That's a red flag. Avoid that conversation, firm, what have you.
Yeah, I think certainly, the worst is those that, are claiming they have this capital and kind of string you along and then, don't actually end up coming to the table. That can really be harmful and a waste of time. If that LP represents an organization that is not fundamentally like aligned with your value set, I think that's a question that only each individual can answer, but that's certainly something to spend time on. I would say if your strategy is such that you're excited about your LPs coming along and co-investing with you and taking that pro rata, and you want to be sharing that deal flow, fantastic. There are those that are investing because they expect it. And so if you don't intend to do that, that should be a red flag for you. Like that's not a relationship that's going to be very conducive. There's certainly lots of family offices that have built entire direct investment strategies alongside their fund investment strategies in order to take advantage of that. And by take advantage, I don't mean that negatively. I mean, like that's just their strategy. And so, but if that's not something you're interested in, if you want to continue following the companies, you don't want to give up that pro rata, that's not going to be a productive relationship for you.
Yeah, makes sense. Any tips or tricks on how I can really understand if someone's stringing me along and they don't have the capital? Any questions I should ask, or any signs that might be a leading indicator that I'm being strung along?
Sure. No, I think so whether they have the capital and being strung along are actually like two, I would say, different issues.
Sure.
So I want to like tackle them perhaps separately. So if I'm jumping ahead, apologies. But the capital piece, I think it's simply kind of some qualifying questions out of the gate. And you should always feel comfortable asking LPs questions to start the conversation. And the LP should always be willing to answer them to start the conversation. So, meeting with an LP and, you ask about their strategy, where they want to spend their time, the size of their private portfolio, are they making new commitments? What's the typical check size? What does their process look like? Dig in, have they ever invested in an emerging manager? What's the smallest fund you've invested in? Don't feel shy. Like, definitely ask these questions, because you'll get a very good sense just a few minutes in whether or not this is worth your time. So definitely do all that up front. And that's true. I think that'll really open your eyes to whether or not they're actively investing in this space and whether you could actually be a fit there or not. So hopefully that could cut off some of the stringing along.
Yeah.
The worst part, though, is, I think you mentioned it earlier, Mike, is the ghosting, right? It's the, you think you have a decent first meeting and then they don't respond for ages. And, it's really hard to get around that. Fundamentally, even as a direct investor, right? Like, the best thing you can do for your founder is to give them a quick no, so that they can be effective with their time. I do believe that very much so, on the LP side of the table as well. If it's a no now, that's fine. You can continue building the relationship, but you don't have to build the relationship right now under the guise that you might invest right now. So it's a huge pet peeve of mine. I think what it comes down to is, for some, it just trying to build optionality. They want to, if things pick up with a particular manager, they want to be able to like get in there quick, like hit the button and say, oh, I met them, 6 months ago. So I do believe that, the majority of managers the majority of LPs understand that pain and are trying their best not to do that. Sometimes it happens purely out of just they're inundated, and it's very difficult to keep up with all of the inbound, particularly if you are investing in this space. There's so much more inbound that you have to manage through. So it's not always on purpose, but it certainly can be, which is such a pet peeve.
Yeah, I got a couple maybe tips that we can chat on a slide or two that we see work on the founder side of things, and maybe could be applied. Talking about building your marketing function, right? We talked about a lot about outbound relationship building, networking. What about like inbound? Like, how do I draw LPs to meet and run my demand gen more or less of my fund? Should I, if I'm not active on Twitter and LinkedIn, is that something I should be thinking about? Are you looking at that as part of your diligence when Recast is evaluating a firm? Should I be hosting events, speaking? Like, what are ways that I could think about building demand for my fund versus maybe me, proactively reaching out to folks? And does this even happen? Like, are LPs actually like going and saying like, hey, I'd love to learn more about investing in your fund?
Yeah, so it certainly happens. There's definitely LPs that are proactively like seeking out managers, and it's for a variety of reasons. I think certainly all the social media mentions that you have here, is that a must-have? No. I mean, there's been successful managers that have a strategy, successful managers that don't. But it's just part of the brand of your firm, right? If some are very active and that's just part of who they are. They want to be very accessible, they're very outspoken about certain things, and it kind of maps to the personalities of the GPs as well. So just as long as it's reflective of who you are in the business that you're building, it can come back to bite you as well, right? I mean, you want to be appropriate, you want to be a positive actor, you want to, be a good member of the community. If you're not, LPs can certainly find that too. I would say kind of the lowest hanging fruit when it comes to this is really showing yourself as an expert in your industry. And you don't need to be posting on LinkedIn to do that. You don't need to be posting on Twitter, but create thought pieces around why you're investing where you are, right? I mean, these are things that you're doing anyway for your thesis, for your strategy. I think those pieces can be really great in not only attracting potential LPs that are interested in this space or just want to see how thoughtful you are in like assessing an industry, but also founders, frankly. Founders may find that and want to reach out to you because they say, hey, look, you're investing in this space. I could be a nice fit for your strategy. At the end of the day, it's not the loudest person in the room that will win. Sometimes they are, but I think that if you can prove yourself to be an expert, this is one interesting tool. And if we're having a conversation about something and it's a specific topic that you're very passionate about, a lot about, you can always offer to send me something afterwards. Point me to an article you wrote. Point me to something on your Medium page that kind of drives your point home. You can even use those types of things as ways to re-engage with LPs. Like, hey, I just wrote this piece. I thought you might find it helpful. And sometimes that'll get people moving too.
Yeah, incredible. We have 10 minutes, which is time's flown by for me. This has been insightful. We got some slides to go through, so we'll try to get through these as effectively as we can. I don't want to skip any of the content. I think one of the things that we see on the founder side, especially when you're fundraising, is it's all about momentum and really creating FOMO, showing a sense of progress, showing that you can execute, saying you're going to do something, following through, doing it, and again, rinse and repeat. We talk a lot about investor updates. And I think that's a great way because whether you're a GP or LP backing a founder or investor, I think the default is, I have no intention of investing in this company. I can see what happens with this fund or this company over time. I want to build a relationship rapport, see how you operate over the next 3 months. I think communication and regular communication is like really the layer of trust and helping build that relationship. Any other advice or thoughts you'd give to GPs that are fundraising, how they can leverage an update, newsletter, email to potential LPs?
I think potential LPs that you actually think you might be able to pull over the line, perhaps in a later close, consider adding them to your actual like committed LP update list. Because oftentimes people will have kind of two separate things, right? It's like the newsletter or something that kind of goes broadly to the public and you do share it with potential LPs and your current LPs that have committed to the fund already. And then there's always kind of like this update that you send to the current LPs. I do believe that adding potential LPs that you think could be potential fits sooner rather than later, I think that can be a nice strategy because you're kind of bringing them into the fold, sharing a little bit more information. I think they can appreciate that.
Yeah.
We've
Awesome.
seen that to be really useful.
Quick plug, if you go to visible.vc/templates, you can check out get a head start. We have a ton of different templates from fund admins, from other funds. The Weekend Fund has an amazing template you can check out. We've built our own, take some inspiration, and you can use those. And we also have a tool that we'll talk about here at the end, but you're more than welcome to check this out as well. In terms of just being able to track where you're at with your different LP relationships. And again, I think the whole idea is here creating momentum, helping you get from that deadly ghost phase across the finish line.
Yeah.
We got a couple minutes left, and I want to make sure we can get to a couple questions here. And if we didn't, we're writing these down, so we'll try to reach out to everyone here. Let's just talk about the first meeting real quick. What's the best way to prepare? Anything I need to do to impress? And is it okay? Well, I guess we talked about diligence on the LP. We already discussed that. So maybe just like, what are your quick 1 minute on what should I think about and how I should prepare with my first meeting with an LP.
I would research the entity as best you can. Just figure out where they're spending their time, what they're interested in, if they've done anything. It's kind of all the commentary I gave about a cold email. Just do the same thing, so you can leverage some of that commentary in the meeting as well.
Yeah, awesome. We got a great quote here. I'm going to skip it so we can get to some questions and get to the end here. We're making a big investment into emerging managers with our product, with special pricing and packaging. We believe in the movement, the space, the momentum, I think as much as Recast and other folks. So feel free to check out a resource here. Our team's happy to chat about any of you with about your fund, about your fundraising, how you can leverage our tools. So please feel free to reach out. And I'm going to get to some questions and we can wrap up. Do you advise giving early LPs a discount for first close?
So I would say that at the end of the day, you want to do what you need to do to get it done. So, okay. But that being said, in an ideal world, you wouldn't have to do that. There are absolutely LPs that are willing to support you early that don't need to ask for anything in return. And know that there are other things that you can negotiate outside of, reduced economics or other preferential treatment. Let them tranche their investment, right? So perhaps it's a fund that wants to invest $3 million. But, their $3 million is really assuming you raise a $10 million fund. Perhaps they can be, 33% of every close up until that point, right? Until they hit their 3 million, right? It protects their downside. So they're not 100% of a fund, but it is a way for them to participate. And early and at full fee, full carry. So you can pay for just about anything. So try and get creative. Certainly preferential economics is one, but there are other things.
Awesome. Maybe last question. Let me just make sure I think it's probably our last question. We'll wrap up. Any specific tips for solo GPs? Talk about the risk, right? If it's solo GP, there's inherent risk. If it's just a single person, how do I best mitigate that? There's clearly solo GP funds out there, especially emerging managers. Yeah. Any specific tips?
So there are plenty of solo GPs out there that have done it successfully. So I would not be dissuaded. I would argue that a first-time partnership is just as risky as a solo GP. I mean, a first-time partnership, there's partnership risk there. There's a lot of risk that it's just going to blow up. And that happens, and it's unfortunate. So obviously, you don't have to worry about that with a solo GP. But the flip side is it's all about you. It's all about your background, your focus, where you want to spend your time, the expertise you can bring to the table, how you source the company, blah blah blah. But I think there's many that have executed it exceptionally well.
I lied. 2 more questions. How long does a diligence process take? Let's say, hey, I'm ready to invest. How long should I expect for diligence to take? Evaluating your track record, background reference checks, all of that good stuff.
So it varies by organization and red tape internally, right? So, groups like us, we're small, we're nimble, we can make a decision in a month if we have to, but that means we're dropping everything else. But we can do that if we need to, if it's something that's fast moving. I think, institutions, it can be, a quarter, if not 2, to get through the work they need to, just because there's a big stack and there's a list of things that they're working through, and venture is not the only part of the market they're spending time on, right? And certainly it can be even more so if advisors and consultants get involved, only because you're not only working through the stack of the potential LP, but then also the stack of the advisor consultant. So I would expect anywhere from, I would say 6 months perhaps on average for institutional grade diligence, but know that people can flex up or down as necessary if they need to. It really depends on the red tape of that organization in question.
Yeah, awesome. What's the best way to learn more about Recast / contact you? I'm sure you're getting inundated. Do you prefer people to reach out cold, email, LinkedIn, a form on your website? What's the best way to get in contact with Recast?
Sure. So if you're a GP and you want to share your information with us, we do have a GP intake form on our website. It's on the contact us part of our page. So you're welcome to share your information there. If you have particular questions, feel free to mention those questions in that intake form. We can do our best to be supportive of those questions. You can check out more information about Recast broadly, as well as our enablement program, and other, cool things we may be up to just on our website. And don't hesitate reaching out. Excited about what you're all doing and hope to have a chance to meet you.
Yeah. Sara, thank you so much for your time. A round of applause virtually. I think clearly you know your stuff, and we had a great conversation today. So thanks so much for spending your hour with us. Thanks to everyone who joined and took time out of their day. Thanks for creating Recast. We're super pumped on what you're up to, and I hope everyone has a great rest of their day.
Yeah, thank you so much, Mike. Really appreciate it. It's great to be
See you,
here.
everyone.